The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 11th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial in right now, 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off 50 points, 47 points, trading out at 20,896. S&P back about 0.4%, or 8.5 points. The NDX 100 down 22 points, trading at 56.59. Russell's off 8. Semiconductors are green. They're up 3 points. They are strong and long. Volatility index, the spot VIX is up nearly 5%, or 48 cents. Gold is up $6. Silver's up 6 pennies. Light sweet crude up 62 cents. ICU Med is a leader to the upside, $6.80. Pegasystems up 6.70. NVIDIA Corp up 6.50. Becton Dickinson, that's up 4.46. Royal Gold is up $4. Tesoro up 4. To the downside, it is Straight Path Communications off $45, or 21%. Priceline down less than 1%. That's equivalent to $14 and change. Dillard's down 16%, $9. Those retailers just getting hammered. You've got RH. Thought that was Restoration Hardware. Maybe it is. Off 9%, or $5.44. So how about Snap, Crackle, and Plop? That's down 20%. That's trading out at $18.38, although I believe that's off of the session lows thus far. But I want to look at what you want to look at. I'm sure that one of the things you want to look at is try to understand, hey, what's going on in the market? What happened to that move lower? What happened to those bears out there? Yeah, good question. Well, let's go take a look at it. You know, you and I, we utilize a different set of patterns here that help us to identify when the market is getting ready to shift. And you want to stay inside those time frames, right? When we do that. The week indice out here, I'm going to call it the week indice. I'm not calling it the Russell 2000. Although many would. For me, the week indice really here has been the Dow. Now, I sort of use that scenario. I don't sort of, I do use that scenario because it's advanced decline oscillator reading back here has been below zero for a fairly decent amount of time. We popped back above it for a few days and back below here just a few days ago, back on May the 9th. Now, the interesting thing is that the candle that's formed right now is a hammer candle. That's into this gap, this sign of strength. So remember, a gap, they're your friends. Make sure you term them as such. They're your friends from the bullish standpoint. They're your friends from the bearish standpoint. From the bullish standpoint, it's called a breakout. And all price has done is come back to test the breakout. Now you've got another hammer candle. This is how the market actually squawks, walks, and talks to each of us. It does it by generating Japanese candlesticks. Now, this candle is today's candle. It's not done. 110 doesn't qualify as a completed candle. We'll see how it ends. But as we speak at 110, the bulls are communicating to you and I. Well, that was the New York Stock Exchange. No, that was the Dow that I had up on my screen out here. That being said, with regard to me believing that it's the Dow that is weak and the one to really be paying attention to, let's just check out these patterns out here. It's like, really? Unbelievable. Okay, here's what I'm referring to. Number one, you've got a nice A to B equals CD to the downside. This here, you can see that. Now, I show a 1 to 1.272. There's really two A to B equals CD patterns out here. Both of them complete, and they complete when you form a bullish reversal signal. In this case here, the bullish engulfing candle. I'll go ahead and teach that to everyone that's going to attend next Wednesday's workshop. Then even if you can't be there, you should go ahead and sign up for it. You sign up for the newsletter service, which you can do for free. You get access to an hour of extraordinary education. So, and these will be a couple of the patterns that we take a look at. I want to teach you how to actually trade them. The short-term top that formed out here in the Dow with one of those patterns. The A to B equals CD, the seventh wave move to the downside. So it gave you the turning signal. Now, just out of the goodness of my heart, especially after just sounding so bullish when I covered Larry's show out there, enough to actually infuriate some listeners out there, but that's okay. Maybe they've now got something to think about. In this case here, I went ahead and posted, hey, you got an A to B equals CD down that's completed. You got a seventh wave move. Beautiful thing. At a minimum, a counter trend rally. We're going to go figure out if it's more than just a counter trend rally. Well, that's the 30-minute chart out here. I mean, folks, these patterns allow you to just eliminate the emotion to the extent that you can. But what they are is they are patterns that work on all time frames. Here is the 120-minute chart. And guess what it's doing? It's got different sets of swing points. In this case here, the A to B equals CD. I'm starting with that larger swing point on the 30-minute chart. Now you can see the 1-to-1. It, too, was making a seventh wave move to the downside. It, too, created a bullish reversal signal, the piercing candle. You're seeing follow through on this next session. And it's Stevie's red line that is being attacked as we speak. This candle here does not complete until 2 p.m. So that 2 p.m. close is going to be important for that 2-hour chart out there. We go to take out what's going on the 5-hour chart. How can this be? Well, I'll tell you how it can be. It just is the way that it is. If you take a look at that little price relative strength divergent top that formed out here on April 26th inside of the Dow, and you start doing the wave count to the downside, well, guess what? You get to wave number 7, G. It's a 5-hour chart. Now, this candle doesn't complete till 2, and we won't get a confirmation until today's close. But if today's low does not get taken out, you now have another confirmation. That's 3 charts in a row out here, all using different time frames, different swings, all coming up with the same conclusion out here, which is that today is actually a buy. It is not the time to punch your card and step on the reading and head to Shortsville out there. It's just not here just yet. That's the message from those 3 charts. Well, let's not leave it there. I don't know. What's the daily chart show here? Let's go find out. Well, I guess we sort of covered the daily chart with regard to the daily cash indice versus the equity futures contract. But it's not from this chart that you and I are going to get the information from the daily. Instead, it's going to be this chart, the one that we showed earlier with regard to the 4 equity futures contracts. One of the things we noticed, newsletter subscribers knew this as well, that the Dow should find significant support at 20,800. That's the bottom of its daily box. I'm telling you, the bulls are just hanging out there. They want to steamroll you, baby. That's if you're a bear. Be careful. It's bear season. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's finish this off here, and then I'll get to the three questions that have come in thus far, and I'll recheck the emails. But the question here, so we have the A to B equals CD down pattern. We have the Gartley buy pattern. That, by the way, they were Gartley buy patterns on all the time frames of those A to B equals CD down patterns inside the Dow. So even though we might say it's weak, hold on, hold your horses just a moment. Let's pull this back. And we pull this back. Here's that huge move off of the low from April 19th. Huge run off of the bottom in April 19th, all the way up to some highs out here in the case of the Dow around April 26th timeframe. And so in that retracement, by the way, that we've seen, it's not even a 0.382 retracement. Just as an example here, if we go take a look at it from low to high, just to see where we're at, 0.382 would have got us down to 27.44. We didn't get down there. Look, all I want you to do is take a rubber band. Just grab out a rubber band. It's on your desk. You know you've got one. I want you to wrap it around that finger as hard as you can. Cut off the circulation and back it off 38%, and then let it go. And then compare that type of energy to wrapping that thing around your finger and backing it off 68% and letting it go. Which one has the most energy? Yes, the 0.382 retracement. You just have H.M. Gartley right now today rolling over in his grave, just saying, how do these patterns work? How do these guys at TFNN know about all the stuff that he wrote about out there? So this turns out to be a Gartley pattern with outcome number 5. It's huge. It means that the A, that C to D leg, because it sets up a larger C to D, is the equivalent at a minimum. In the case of the from 2307 to 21, a 700-point move out there. Yeah, I know you guys laughing, and it can't be. Well, really, it will be. The Dow is headed higher. The Dow is headed much, much higher. I mean, not much, much higher. I mean, much, 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 much higher over time out here. The question is, was this a good buy? Not goodbye, sayonara, see you later. Was this a good buy out here? Well, let's come back and take a look at what's going on short term. And we'll just take a look at the retracement level, the most recent retracement level here of this A to B equals CD down pattern. And really, you've got outcome number 1, which is the 0.382 retracement. That was at 20,855 out there. You're kind of slicing through. You came into it with a wide-ranging bar. You backed off for a half an hour. Now you're trading above it. So if you're still short this little puppy, well, what you should anticipate is that price is going to get up to 20,914. That is outcome number 2. Can I guarantee that to happen? No, but just look at these patterns out here, folks. 20,914. If you respect HM's work out here, then you want to make sure that you respect outcome number 2. And this is a pretty nice move off of the bottom out here. We'll see if that occurs. Above that, it's 29.56, and above that, it's all the way back up to the highs out here. Now, we can still call this what it is, maybe a counter trend rally, maybe even to 20,914, maybe not. So that's on the Dow equity futures contract. That's taking a look at the different patterns that formed out here, different patterns that I'll share with you in more detail, how to calculate them, how to be able to identify, because it works in both directions. It works on all time frames out there. And so that's that. Now let's go to the questions out here. And we've really got a minimum of 3 that have come in. So let's take a look at those. The first question from Z in the Den says, SR, please comment today on your hypothesis about what is going on with the phenomena past weeks, ES and NQ indices hit by selling 9:30 to 10 a.m., which dries up by about 11, then buying into the close. Your idea about this, please. Many thanks, Mr. Z. So here's why I shared this chart with you earlier, and there's a couple different ways for us to go and take a look at it. First, with regard to, I know that the phenomena is accurately depicted here, but for those of you at home that aren't really trading the equity futures contract, how do you try to track this? In essence, the question is, how do you compare overnight action versus, or I'll call it overseas action versus U.S. action? Not that overseas traders aren't trading the ES, but just trying to create the day into 2 segments. And one way that I do that is by taking a look at the SPY itself, because you can do this as well. This is not like, you don't have to be a genius, so in which I am far from a genius in order to be able to do this. But the question sort of suggests that the U.S. session, as of late, has been stronger than the international session out here. The black line on my chart identifies what happens to the SPY itself from the time that it closes, 4 o'clock, till the time that it opens, 9:30 the next morning. Now, I do a little bit more than that. I massage it over a period of time, and you will go ahead and massage it over a period of time to figure out which one works best for you. So I won't give that piece to you, but I can share with you that the red line on my chart covers the morning open to the afternoon close. So I'm now comparing what I consider to be overseas versus U.S. market. Now, the S&P 500, or the SPY, actually performs better when the conclusion here that Mr. Z is talking about, where the U.S. session performs better than the overseas session. What that typically means is just that. Is that is a very bullish thing for the market. Now, because of the length of time that I use here, it hasn't shown up yet. In fact, it says that the SPY has a slight problem to it. Not that it can't perform okay, because I can find time periods where this crossover occurs. This crossover is not really used for a bullish or bearish crossover, so to speak. You want to be able to utilize it with a number of tools out here, but it's like trying to identify the type of strength or weakness that are in the markets. And actually, we've seen a market that really has somewhat gone sideways for quite some time inside the SPY, have we not? No, yes, we have. And that sideways action is actually lending itself to this. Now, I didn't update this with regard to yesterday's data. I had it updated with regard to today's Thursday, through Tuesday. But yesterday's data was not going to change this substantially either way. So what does that mean? I think it's important to pay attention to what it is you're looking at, because you're probably not looking over the same time period that I am. And that is a very bullish message in the market when the U.S. outperforms the overseas action. And in essence, really what is being communicated here. And I can show you that when that occurs out here, it is very bullish for the S&P 500. So that should make you say, something to think about. Now, with regard to what else is going on, Well, how about that old volatility index? You know, the one where people were getting their skirts in a tizzy because it was all-time lows. When was that? Was that back on May the 8th out here? And of course, my message to you was, yeah, so you think that identifies a market top out there? It has never done so in the past. Why would it do so now? There's not been a market top where the VIX index has been down at all-time lows and there's been a top in the market. Go find one for me. Find one for me, send it to me so that we can update the charts and say, hey, Steve-O, you were wrong. What you'll find out is that's just not the case. A VIX at 1067 says one thing: gobs of liquidity. We're seeing it in all the patterns and everything else that plays out in the marketplace. This is a bull, and I mean bull market. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, how about that TPC tournament going on up in Jacksonville? What a great course that is. I've played it many times out there. And I used to play in a member guest up there. Interesting golf tournament they have for their member guest. And used to, during the tournament, years ago, when I was back in the computer business, we used to have, Greg Norman was the sponsor for Epson printers. You probably remember Epson, those dot matrix. Well, some of you probably remember those dot matrix printers. And on Fridays, he would throw a party. He would come in. He and his wife at that stage. What was her name? Anyways, they used to come in Friday evening, spend time with the customers out there. It was a great time. Now, unfortunately, Greg usually missed the cut, but he was still in pretty decent spirits on Friday night. I always said, hey, we should try to change this thing to Thursday nights instead of Friday nights. You'd rather have a guy out there who's made the key. He never really played that tournament too well. In any event, that's neither here nor there or anywhere else. But Michael is long USO, which means he's really long the light sweet crude contract. He's got some calls as well as on the XLE. And his question is that a good trade? I don't have enough details to answer that. Here's what I can share with you as far as levels that you should be watching. Now, here we're taking a look at the current contract for light sweet crude. The panel number 2 is where we've got a 60-minute time frame. Panel number, in essence, 3 is the 240-minute, then the daily and the weekly that are out there. Well, on the 60-minute, Michael, what you're watching for, believe it or not, is a price point of $47.76. That should hold as support. Now, I'm talking about on a closing basis on every 30-minute bar. We're only 2 minutes in on the next bar out here. What you'd really like to see price do is close above 48.09. Now, what happens if it closes below 47.76? It opens up Pandora's box. I don't know where Pandora's box will head to. I can say that the next level of support in looking at the charts here is 46.14. So that's if you close below that, that's what I would say would become the target until the next profile on a 60-minute would form out there. And no, it wasn't Chris Everett. This goes back 30 years ago, right? 25-ish, 20, 27, 28, 26 years ago. Was not Chris Everett. It wasn't Kristen. That was not her wife. It goes back further there, Jay. Go back. God, I should remember it. In any event, back to Michael out here. Now, if you close above 48.09, the message here, Michael, is that you should see light sweet crude get up to 48.56. That really becomes the next point of contention. Laura, thank you. It was Laura. That's it. Pretty simple. It was Laura was Greg's first wife's name out here. So 48.56 is a price point you would be looking for. Now, that becomes an area where I don't know if we're going to see less would get it or not. It's going to be pretty close to it earlier in the session. The high so far today has been 48.22 to 48.56. If it can close, and the reason is that's where comfortable is, well, buyers and sellers are most comfortable in light sweet crude out here. And if you can get above 48.56, then you're looking at 49.76. That's where I would be looking probably to go ahead and take my profits. Sounds like you have profit positions inside the USO. That's what I would be looking at. I would probably time the XLE trade that you have with that as well. Now, depending on how you would trade this, if light sweet crude gets above 49.76, and you're looking at 52.46 as the next spot. But right now, everything looks rosy out here. You had a brand new profile. You've got really the last 3 profiles out here inside the 60-minute chart all have nice bullish configurations to them in the way that they're forming, which is why you don't want to see price close below 47.76. So good luck on that trade out there. Now, Larry wanted to short the GDX out here. All right, that's a whole different task. Let's go take a look at shorting the GDX out here. Now, in order to do that, Larry, what we want to do is take a look at what's going on inside the currency pair for the yen. And again, we're going to look at the same time frames out here. We're looking at 60, 240, daily and weekly. Now, in order to short the yen, what you really want to see is the yen trade above 114.33 out there. And we're not there. Right now, it's trading at, well, of course, I have a delay. I do have a 15-minute delay. It's trading near the 113.92 area. But here's the problem. Just as we came on the air, a brand new 60-minute profile formed. We'll let it kind of catch up here. Here you can see it. So in the last hour, a brand new profile formed. It formed below the prior profile, and that's a little bit troublesome. It says that, look, you can anticipate that gold and or the miners are going to pull back a bit here because price is likely going to get up and test 114.13. And if that happens, you should see bonds gold, silver pull back a bit. If you get over 114.13, then being long is wrong when it comes to gold and silver in utilizing a 60-minute time frame to take a look at what price is doing from a correlation standpoint, directional correlation standpoint out here. So you want to go short. You just need to see some of these resistance zones be taken out, in my opinion. So that level you're looking for is 114.13, because if the yen is pulling back here, gold is going to start moving higher. And in the 60-minute time frame, if you close below 113.50, what you're going to see the yen do is get down into the 112.91 area. 112.91 may or may not hold as support. But at that stage, you wouldn't be thinking about actually, well, you might be thinking about it. I would suggest don't think about it because you, at least until price gets down into that 112.91 level, and then you want to look for some other type of a pattern out here. So I'm not a big fan, based on what I see going on inside these charts right now, for the yen, of saying you should go take a short on the GDX. Now, that's just looking at those charts. We should go take a look at what's going on inside the GDX itself. Let's go look for some go, no-go points here. So we'll punch up the GDX daily chart. And, well, there we go. No, that can't be right. I think that just has yesterday's date. Why hasn't it updated? That's the question. Let me switch over here, but I can sort of use that chart. 2184 being a number. Let's go punch up the GDX. Hopefully that other chart will go ahead and populate. But what you would want to see in order to really short. So let's turn on the profiles. Let's go see here what the market profiles are communicating to you and I. I believe we've seen a rejection of the top of the daily box. And maybe, Larry, that's what you're referring to in my comments perhaps yesterday. But the yen's not really participating in this move to say, yeah, now is the time. No question that the GDX has run right into a resistance zone of the top of that daily box out here. And when I mean run into it, we're talking about 2181 and the top of the day. I'm sorry, you're trading at 2240. Top of the box is 2243 out there. The actual high today has been 2250. Volume, 24 million shares. Light volume compared to that a gap to the downside. For all of you gap lovers who think gaps are negative out here, and why in the Sam heck would you even be thinking about going along the GDX? Now, I'm saying that facetiously, but I'm saying that seriously because most people come up with the negative side and they won't come up with the positive side with regard to gaps out here. It just blows my mind. Don't short the GDX just yet. Don't do it, Larry. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 47. S&P is down 8 points right now. So I don't see any other requests out there. So let's go surfing around and see what we can figure out. Let's go see how some of the individual stocks are trading here. Let's go take a look at the guys and gals that are moving to the upside out here. ICUI, that's ICU Med, that's up 5%, $8.88. Has some big volume behind the move. That's off of their earnings, $232 million versus $89 million from the prior quarter. So that's a nice move. Wow, looks like everybody in this equity is having a party. Let's put on a monthly chart real quickly. Yeah, it is. So talk about a nice move out here. The problem is I can't really figure out where this thing is headed to price-wise. I mean, well, let's take a look at the conservative approach. This month, you're already above a swing point with about 50% of the volume, and we are not even 50% of the way through the month. So it looks like this has got a confirmed A to B equals CD up on a monthly basis. That would take us into a price range. Again, the ticker symbol here is ICUI, up around the 196.25 level out there. So it looks like, what do we got? Who is that? What T? Is that the number one T? It doesn't look like the number one T to me. Although they did make changes. Yeah, maybe it is. Maybe it is. Just looking at Kucher teeing off. But I can't tell if that's number one. You know what's really, yeah, that looks like the number one tee with the bunker there on the right-hand side. Interesting. So I haven't played up there for a number of years, so they've really made some changes to that number one tee, and they used to have a nice little viewing stand that was in there, kind of stadium type feel in that stadium course. That seems to be gone out there. That number one hole's a bit of a tricky hole out there. All those trees down the left-hand side. Not even. So ICU is on its way higher. Let's go take a look at NVIDIA. I like weekends like this, days like today, because we don't have to watch that. We can talk about all this trading, and in the background we can have the TPC tournament going, and what a great weekend out there. And we also don't have to listen to all of the crappy politics garbage that is going on out there. Did you elect these guys and gals out there? Throw them all out. In any event. Okay, so if we take a look at NVIDIA, we take a look at this brick wall out here that's been trampled upon. That's the wall that formed on December 28th when it moved higher with 57 million shares. Now you're up above that level. That was a resistance. That was a key reversal session. That was a bearish engulfing. It was confirmed with some bearishness back here in February 2016. And in fact, there was even some volume up there of 41 million shares. So yesterday, what does this little puppy do. 53 million shares moving into those swing points that actually close over them. Yeah, it looks like it did. So you had some decent volume. It wasn't the same as 57 million, but pretty darn close, right? PDC out there, 54 million. So this thing is on fire. That was really a consolidation. And that says that the measured move inside of NVIDIA now, for those of you that are NVIDIA holders, you stay put. Of course, if you're in it, you've probably been in it for a while, so you want to be in it for an even longer while. And that takes you into about the 143 range. You're at 128 right now. NVDA is the ticker symbol. That's no longer going to the moon. That's going to Mars out there. How about Pegasus? Pegasystems, PEGA. Hey, nothing like a little Saganaki and Tzatziki for a little lunchtime food out here. This thing is gapped up, huge volume. What have they cured out here? Pegasystems. I don't know what it's cured, but man, the shareholders here, they're awfully fat, dumb, and happy. And I meant that in the pocketbook way out here. And actually not too dumb, pretty smart if you ask me. So this thing's at all-time highs. Where is this thing headed to? I don't know. Even on this monthly chart, I don't see a pattern that really sticks out at me. Looks like it's just simply going higher as it's cleared all forms of resistance. I hope that you are a holder of PEGA. Don't know what they do, but their stock chart looks awfully, how can you say awfully nice? That looks very nice is what it looks like. How about Regeneron Pharmaceuticals? We could take a look at them, REGN. That's up about, 1.25% out here. This is also taking on highs, most recent highs from the trading day of May 5th that had volume of about 1 million shares. You're at 438,000 right now. This is headed for this little swing point, maybe not so little. Let me pull back a little bit further out here. We'll talk about a consolidation pattern. And this thing may be getting ready to break it. How about this? How about this for Regeneron? So I don't know what number in the IBB Regeneron Pharmaceuticals is. We can go ahead and put it up on my screen and try to figure that out. But look, folks, Regeneron Pharmaceuticals, if it can break above, we'll just make it the more difficult thing. Break above, close above, 452.96. You're at 436. So it's got a few bucks in order to do that. But if you can close above 452.96, you have a consolidation pattern that has a measured move out there, a measured move of that'll take you into the 56 level. I that cool. Hitting the ball on that out of the rough on that first tee. I didn't see where his ball landed. He should play that course pretty well. His dad lives just down the street from him. I used to play with his dad, Peter, all the time, many years ago. But 556 is the projected price target for Regeneron Pharmaceuticals if it can clear this consolidation level. So just out of curiosity here, let's go take a look at the IBB and see where Regeneron fits, if it fits in the top 10 out here. Regeneron is number 5 with about 7%. So I wonder what Celgene is doing, CELG, just out of curiosity. CELG, let's go see what it's doing out here. Not as promising as the Regeneron Pharmaceutical chart out there. So take my comments lightly. Regeneron Pharmaceuticals looks like if it can break out, there would be a breakaway trade out there. But go look at the other 9 equities that make up the top 10 in the IBB. Let's go take a look at the IBB before you make any kind of decisions out here. In the case of the IBB itself, yeah, it is heavy as certainly as Regeneron itself. Let's put up the weekly profile. It's trading below daily. It has been for about the past 4 trading sessions. So the weekly is just not printing on my screen. Oh, that's a bummer. Sometime, there we go. Now it's up here. You'd have to say that the IBB right now, based on today's data, is a better buy at about 281 if it can actually get down there. 281.62 to be exact. I don't know if it's going to get down there or not. So your primary buy would need to be about 286 if you are a believer inside of the biotech, NASDAQ biotech ETF out there. Okay, so that's looking at things that are moving to the upside. How about to the downside? Should we go take a look at Priceline? PCLN, yeah, what the heck? Yeah, well, okay, this doesn't look so good. This thing gapped away yesterday, right? Gaps away yesterday, but it's found support. And there was big volume yesterday. So that volume out here yesterday was about 1.7 million shares. That's big volume for it. But it just got support all over the place. First, it's trading into, and where it's found support is the top of its weekly box. That price point, by the way, is $17.9875. And if you're short for some reason price line, then be careful. You really need to see it close below that level. If you get that, then you're looking at maybe $17.07. That becomes your next level of support. And at $17.07, that's where the breakout began, the gap to the upside. That should be really super strong support. That's in price line. Steve Rhodes, TFNN, Red.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So that's a nice group. You got Rory and Dustin in the same group. They're just playing the first hole there. I'm assuming that they didn't start on number 9. I don't know that, but I think they 2 o'clock. I'm sure this is their first hole out there. So that should be if those guys can get going on fire. And getting going on fire, that golf course is probably 5, 6, 7 under. That would be great fun there. Yeah, you know where I'd rather be. It'd be doing the show right from there. So let's go take a look at as we end this show here. It's not as if the Bulls are out of the woods here just yet, but I just think it's probably. That was weird. I think I'm still alive. I think I'm still live out here. I think I'm at least live with regard to the Skype system. But that was kind of weird, Al. Send me a hi sign or something like that. In any event, and I think I'm still in the den. No, I don't think I'm in the den. That's weird. Let me try to repost here and see if this works. So Kaz says yes, but my system said no. Let me go ahead. I'm just going to repost something that way. Hopefully that gets us back to live here. So, yeah, you're live. Okay, good. So as far as, so we're not totally out of the woods. Let me switch over to the NDX 100. So give me a moment here. I don't know. I think we still have a bear because of the gap, slight gap to the downside this morning. We probably still have a bear separating line in it. No, I take that back. We don't. There's no bearish signal inside of the NDX 100. And this market, it's only in wave number C out here. So, close above Stevie's red line, because you can see little black kind of numbers are above the red box on the very right-hand side of my chart out there. That tells us that we're above it. Still got a rising price oscillator above zero. It's still mean green bullish machine out there. So be careful. No problem in trading the short side, both sides of the market intraday, but it's just not the place to be hanging out. As this morning when I was doing Larry's show, I said that what I'd really like you to do is I'd really like you to be thinking buy the dip. You got to figure out where those dips are. Hey, those patterns that we took a look at, those are nice. But I want you longer term, okay? You've come up through a QE, all these QEs out there, and the biggest QE that anyone has ever seen, as if this was orchestrated, is going to occur probably this year or next. And that's going to take the markets higher. Look, if the next bear market forms, you and I are going to be able to spot it. I did that free workshop for you a couple of weeks ago. Those patterns have existed since the 1880s, as far back as I tested it, and they're present in all of the bear market tops. We don't have one right now. And if we do, then we'll go ahead and we'll change some tactics out here. But this stage of the games, the tactics are to buy the dips. If you think it worked between 2010, 2009, if you want to call it, and now, you ain't seen nothing yet. Who sings that song? BTO, Bachman Turner Overdrive? That's the market. It is going to be on overdrive, sponsored by Bachman and Turner out there. And by the way, Randy Bachman, he's a pretty cool character out there. Yeah, the market's going to be on steroids like we've never seen before. That's what it's going to be doing out here for a while to come. Play it the short side if you want. Do it intraday. Make sure you're aware of your TAS market profiles, your seventh wave moves, your price relative strength divergent patterns. Just a number of things that I can teach you about next Wednesday. So folks, I've got your back as much as I can. Come to the workshop next Wednesday. It's real easy to do that. Just sign up for my newsletter service. You can do that for free on the homepage at TFNN.com. Stay tuned, because the big polar bear, David White, he's up next, and Tom O'Brien from 3 to 5, and Andy Heck to take it on home. We'll see you on Fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.